Oil prices are climbing to start the week as investors wait for the latest word on supply levels from the world's top producers. The international crude benchmark Brent is up 2% to trade at around $95 a barrel. That's ahead of the meeting of the OPEC Plus alliance later on Monday. Led by Saudi Arabia and Russia, the multinational cartel is expected to keep production levels steady. Some are even speculating there could be a reduction in the amount of fuel the group pumps out of the ground, despite tightness in supply. That would aim to reverse the recent decline in the cost of crude tied to weakening demand from major economies. Energy markets are also in turmoil following Russia's decision to keep its natural gas pipeline to Germany closed indefinitely. Berlin has announced a $65 billion bailout plan to help Europe's largest economy cope with its worsening energy crunch.
The third relief package we put together is bigger than the first two combined. It is of a large dimension. We are talking about 65 billion euros. When you add everything together, we are talking about 95 billion, if you include the first two relief packages. That's a lot we are doing, and it's necessary.
Now for more, let's go to Victoria Scholar, Head of Investment at Interactive Investor in London. Welcome back to the program, Victoria. Now let's start with the OPEC Plus meeting. What do you think they'll do? We know a lot of their smaller members have consistently missed their output targets. Is the group happy to just let those members catch up, or maybe more satisfied that they're laggards now at this point?
Well, we're seeing Brent and WTI both up by about 2 or 2.5% because OPEC Plus is actually considering cutting its output, as you mentioned. This is in order to try and stem some of the recent bearishness that we've seen in the market. The cartel's looking to be considering cutting its production to limit supply and try and put a floor in these price declines that we've seen lately, because since the peak in March, Brent crude has suffered a sharp slide. It's down by about 25% from the peak, breaking below this key $100 a barrel mark and pushing even lower. This is amid concerns about the global economy. We know China's slowing down. We know there's the gas crisis in Europe. All of this is leading to rising concerns about the possibility of a global recession. But it looks as though, although this production cut is on the table, it's not the base case, at least for us. We think they're going to stick with their guns and keep production as is. But this rhetoric and this discussion around the potential for a cut is helping to prop up prices. So it's almost like a verbal intervention.
So you mentioned the natural gas crisis that's also happening in Europe. Germany is the latest European nation to announce fiscal measures to help their economy cope. How far will that $65 billion bailout package go for Europe's largest economy?
Well, it is a big bailout package. 65 billion euros is a lot, and it's going to be spent on measures to try and combat the cost of living crisis and inflation. It's looking at increasing benefits. It's looking at a possible windfall tax on some of the energy companies, and it's also considering subsidies on public transport as well to try and help consumers with this affordability crisis. But remember, Germany has already bailed out its largest importer of Russian gas, Uniper. But we are looking at these type of support measures, not just in Germany, but across Europe. Spain, for example, is also trying to tackle its cost of living crisis by cutting VAT on gas to 5% from 21%. But this news over the weekend that Russia's now cut off Europe from the Nord Stream 1 pipeline is having really disastrous effects on the gas market. We saw the Dutch gas futures price up by 30% at the start of trade this morning. UK gas futures up by more than 20%. That's today alone. So no doubt these are going to be adding to those inflationary pressures and the squeeze on availability of energy supply flowing to Europe.
Yeah, so a lot of pressure on governments in Europe. Victoria Scholar from London, thank you for joining the program.